Dear friends of Volumetric Trading, good morning from Eduardo Burattini. Welcome to this video analysis for Thursday, October 16th, 2025. So, as usual, the analysis will be based on the S&P 500 and Nasdaq futures. Let's take a quick look at what happened yesterday. Break time equals 0.5s/, so we can connect it to what we might expect for today. So, today the situation is particularly straightforward because, in fact, we have a market that yesterday held up more than well. It respected the boundaries of its most important distribution area. Basically, what happened yesterday? The market opened, as you can see here in the area, right around 6,700, a technical level that we've mentioned several times in previous video analyses. It went on to test a very significant area at 6,755 to 65, this whole 10-point zone that we see here. Up here, there was a rejection that was absolutely noteworthy, both from a structural standpoint and from an order flow perspective. Because we can see that from this point, there was, let's say, a bearish attack, an absolutely significant one. So much so that it was marked by the volumetric plugin, with 2 bearish pressure zones and 1 bearish pressure zone on the time frame. A larger one, followed by another zone that appeared later. So we can say that this rejection was a textbook rejection. However, what happened next? This rejection was absolutely supported, perfectly in fact. We could even say it was anticipated and very well qualified by what happened. Let's say its rejection of the highs brought the market back to retest the 6,660 level. Great, because as you can see, we also mentioned this in the previous video. Yesterday, it brought us back once again to touch the 6,660 area, an area that in the meantime was then brushed by some particularly strong long pressures, which paved the way for reaching this high that was made yesterday. Now, this level not only acted as support, but it worked more than excellently as support, because we can see that not only did the static level of 6,660 pass through here, but just below it was also the VWAP-1 of the week, and all of this coincided with the already distributive, lower part of this volume profile distribution, where we can see that the very limit set by the most important high volume node in this area is exactly 6,650, so absolutely, it's the same support area that we had identified as supportive. On Tuesday, it was confirmed as such again during yesterday's session. And this basically led the market to close around what was its 50% range, so it always closed in that area. 6,700, where of course we have the settlement. Actually, let's take that into account, of course. Give or take, the technical area of 6,700, which is also more or less what was the 50% of the daily expansion. So what this means is that both from a volumetric point of view, but also from a geometric point of view, this doesn't necessarily have to happen every time, but certainly. It's a pleasant coincidence. It means that the day was completely distributed because it created these 2 particularly important swing highs and swing lows, especially significant from a volumetric point of view, from an interflow perspective. Order flow, but above all, speaking from a temporal point of view, from an intraday perspective. Okay, if we just slightly widen the time frame, we see that in fact these were nothing more than 2 dynamics that perfectly coincided with the area. A little bit more that goes beyond the single session of absolute balance within which the price is currently moving. So it's as if it's moving within two tracks, okay? It oscillates between a support and a resistance, with the difference, of course, that the support has been perfectly respected. The one that was already created previously, while a new resistance has been formed. Specifically, the one in the 6,760 area. So what should we expect? Obviously, for today, since it's in total balance, in total distribution, as the price confirmed for us just yesterday, we expect the price to keep moving between the tracks, so definitely contained. Between the 6,660 and 6,650 area, and on the lower side it's 6,760, let's say 6,750, just a bit lower. Now, ahead of it, there's still a bit of a friction zone. But yesterday, in any case, it was particularly so. This area was also particularly significant. So let's say the first hurdle is to see. Most likely, the 6,730 area will be tested already during the European session, and then after that, 7.50 and 7.60. These are the two boundaries of what is the most important equilibrium zone. Now, obviously, since we're in an equilibrium zone, the market is absolutely neutral. It's difficult, of course, and premature at this stage to say whether there's more reason for continuation, meaning a recovery of the previous highs at 6,800, or if it will continue downward, because a market in distribution is literally a market in equilibrium. As long as the equilibrium holds, we can only rely on its boundary levels, and these are exactly the ones we've just mentioned. Definitely, definitely, this really makes me think, this. After such a significant bearish rejection, what really makes me think is how the close basically returned to the opening level. So definitely, let's say this already gives me a somewhat more moderately bullish outlook. We're still in balance, still in distribution, but I consider this rejection, which happened yet again on the same support, to be very important. Then, of course, this is a move that, as we've said, faces several resistances ahead, the most important being 6,750 to 6,760, so that's definitely one of the key levels to watch for the current session. Let's take a look at the Nasdaq. The situation on the Nasdaq is a bit more tangled, but still very similar. So why is it a little more tangled? Because the support area was still absolutely excellent, the low from yesterday, which was around 24,660, also here, as you can see, bounced off what is still a particularly important level, the BWAP-1 of the current week. However, here there's less alignment with the static levels. Of what were the possible value areas from previous weeks, you see. Actually, we have all of them, and they're even quite overlapped, so the starting scenario is a bit more confusing. But aside from that, there's definitely something you can't help but notice. The low that was just mentioned is actually the southern part of a much larger distribution area. Look at how significant this volume node is. There's a lot here, probably, well, no, actually, a volume node this significant here definitely defines what could be the equilibrium zone of the whole, let's say, Gaussian that revolves around it. But if this is an equilibrium zone, how come we don't have as much volume just above it? Volume left below. Why isn't there symmetry within this Gaussian formation, and especially, why is there such a significant step here that almost creates a kind of volume cliff? So, the answer to this is really interesting, because generally this is one of those situations where, just by looking at yesterday's POC, you can see the whole value. The area highlighted in light blue from yesterday has already, let's say, it has settled in a very stable way, almost exactly coinciding, right above this. Let's call it the North High, right here. What does it mean that the micro distribution zone, so considered more from a daily perspective, is literally being rebalanced? This zone is literally being rebalanced, so it's building a micro acceptance area within a larger acceptance area, simply aimed at re-accepting an old zone where, in any case, there was a bit of intentionality. We can see that it was there, even if maybe the market didn't spend too much time there. So it's the reiteration, in any case, of an acceptance that was already present in the past. This is definitely a sign of wanting to continue building acceptance. Accompanied by volumes above this area, 24,008 and 29, which at this point fully take on the characteristics of support. So here too, you can see that the situation is a bit different in terms of elements, but we are absolutely, even here, looking at a perspective of balance, obviously always balance, but more oriented towards strength, okay? Or at least that's what showed up yesterday, and today we need to monitor whether this strength continues to show itself. But what does it see ahead as more significant resistance levels? Far fewer than in the S&P, because in fact, here the only real important resistance is this one at 25,324, which goes from 25,324 up to 3.65, so a narrow range of 30 points. At that point, we would be extremely close to the all-time high. So, let's say there's a minor resistance level, but it's already been reached, so it already has a bit more validity. The one that was lost was this 25,100 level, where the market actually hit its high just yesterday. Here too, the lower limit needs to be held is 24,670. Above that, resistance at 25,100. And consequently, the next target, if all this acceptance developing in a bullish continuation is confirmed, is 25,325. Obviously, this analysis is intended for educational purposes only, so it should absolutely not be considered as a public solicitation or as an incentive to invest or take a position. I thank you in advance for your attention, and I'll see you later for those who are clients. Volumetric trading for the usual V Live, where we'll be trading live in real time with the markets open. And I wish you a good day.